Can you give us first, Bob, a bit of an overview here? Because there's a lot to wade through. Operating income and revenue both up more than 20%, but everyone's focusing on the earnings per share and the spend.
Well, you know, you have to take a step back. Here's a company that makes massive amounts of money, has massive levels of growth, and yet, yeah, people are finding those little areas. You know, the problem is always about expectations here. And, you know, obviously we'll talk more about this, but the ad ratio, the click numbers, you know, the amount per click is clearly a challenge for them. But what's good is we're seeing them spending money on some of these other bets that I think will pay off in the long run. In the short term, sure, there's a lot of extra money being spent, but I think they have a number of very interesting opportunities. I mean, Google recognizes that they have to extend, or Alphabet, pardon me, has to extend beyond, you know, the advertising business model. And these bets, slowly but surely, are going to start to pay off. And I think we're starting to see some of those signs of spending in those areas that we'll see growth later.
We'll dig into those in a moment. Let's dig into the advertising revenue element with you, Adam, because I'm seeing cost per click falling, what, 15% this time round, but they're still managing to lure in more people to buy those adverts. They're going up about 36%. Is it a worry that people aren't paying up for each click so much?
Well, to a degree, the declining cost per click is a continuation of the trend that we would expect as people move to mobile. Conversion rates are still lower on mobile devices, so therefore the advertisers that are marketing those businesses are less inclined to pay up for clicks that happen on mobile devices. So that's all more or less to be expected. I think the bigger question is around the click metric in general.
Yeah.
We're hearing from a lot of our customers that they're sort of starting to question how valuable are clicks overall.
Explain that, because you don't have to click on ads anymore.
Right, well, I mean, especially, you know, so obviously the search engine is Google's cash cow and has been for some time, and the default behavior for an ad on a search engine is to click it and to click all those blue links. In YouTube, it's very different. You're viewing an ad, and so that could be a very good thing for Google. You're opening up to a whole new range of use cases, a whole new range of different verticals. You don't tend to click convert to buy laundry soap, for example, unless you're shopping on Amazon. So that can open up a CPG category and things like that. But the whole click metric is going to end up getting a lot of noise the bigger and the more important YouTube gets as a share of the total.
Talking to that, interesting, we're just hearing from Sundar Pichai, of course, CEO of the Google element of the business, and he is saying that key trends powering Google at the moment, machine learning, 3 biggest bets, YouTube is their first one, cloud and hardware. Let's dig in with you, Bob, a little bit more about the cloud and the hardware. I was impressed. Cloud, they say, is their fastest growing area of the business, but they got tough competition when you're looking at Amazon and Microsoft.
Well, they do, and of course, Microsoft also showed big growth in their Azure business. So, but look, it's a very large area. There's a lot of opportunity for everybody. This is definitely a case of, you know, raise all boats kind of thing. And so I think we'll see Google continue to expand that cloud business, and as they can start to leverage some of their machine learning, some of their AI kind of capabilities, integrate that into their cloud offering, that offers a great way for them to differentiate somewhat from both what Microsoft and Amazon are doing. Now, both of those companies are doing that as well, but each one has their own special sauce and special flavor. And then on the other bet side, I mean, look, this is a company that is heartily dependent on one area, and for a lot of people, it does raise some concerns long term, like, well, how long can they possibly sustain that? So let's look at what they're doing. They spent a lot of money advertising the Pixel, right? That's part of the reason why those costs were so high.
$3 billion.
But we've all seen the ads now, right? It's a nice piece of hardware. Google Home looks like a very nice piece of hardware. They've got Daydream on the VR side. There's a number of very interesting areas that they're starting on. They're going to take a while, but they're clearly laying a foundation to do some nice growth in hardware and additional services on top of that hardware.
And back to the YouTube element of the business, you think this could actually become the powerhouse going forward, do you? I mean, when does it start to show its dominance? Because they don't really break it out for us.
Yeah, I mean, I absolutely think it's a huge opportunity, and I think where people actually get it somewhat wrong or diminish the opportunity is thinking of it simply as TV dollars moving to online video, and that's not all it is. It's actually a growing the pie scenario, because there are all sorts of businesses where the owner maybe has an iPhone 7 and can create a quick video and then promote that on YouTube and Facebook, for example.
Google would hope it might be a Pixel.
Yes, exactly. Exactly, yeah. But that's an example of an advertiser who never would have bought a TV ad. So sure, all of those TV ads are likely going to move towards digital over time. More consumers are spending time on YouTube, so that's all great. And it also opens up a whole new set of demand because of the lower friction and lower barrier to entry for digital video.